So I want to get into this story that I came across from a very well-known economic trader called Marty Party. And he breaks down just every step of what this next 6 to 8 months could look like to the end of 2025 and into 2026 when we're going to have more interest rate cuts. So I just want to go through this story line by line and give you my view of what I think this could mean. So it's really profound, really interesting, really useful. And then I want to go into some indicators that can show targets for where Bitcoin could reach based on Fibonacci retracement levels. And then also just why Bitcoin has value, the fundamentals. These videos hopefully can be watched at any time. They're not time sensitive. That's the whole aim of making a video that can be watched in a few weeks, a few months from now. It's not something you have to watch today. So if you get any value from this, like, comment, subscribe, hit the notification bell. Let's go. Okay, I'm going to break this long thread down step by step, and I've broken it into segments, and I'm going to read out each segment and just give you a bit of a commentary of what I think. The whales, the rich accumulators, control the price of mainstream crypto. All other crypto correlates with mainstream asset indexes. With Bitcoin 70% dominant means price will follow Bitcoin. This is looking at the broader digital asset sector, where you have other cryptocurrencies like Ethereum, Solana, XRP, Cardano, Sui, Hyperliquid. All of these are a function of what Bitcoin does. That Bitcoin's movement can dictate where they go, and they are beta derivatives of Bitcoin. So they usually go higher when Bitcoin goes higher. They usually go lower when Bitcoin goes lower. And it's that type of relationship where they are correlated. So it's hard to find opportunities where these deviate, where Bitcoin goes down and these altcoins, these other crypto assets go up. The whales are manipulating the price to a distribution model called the Wyckoff method. It is designed to cause maximum pain to you, the leverage traders and paper hands who sell on fear and buy on greed. This method I've experienced a few times, usually during the summers, but after any massive move from Bitcoin, when it breaks out of a zone, it went from in the 30,000s into the 50,000s. When it broke out of the 50,000s and went into the 70,000s. When it broke out of the 70,000s and went into the 100,000s. In between all of those periods were months of pain, months of time where you just didn't know if this was the end, where it was so volatile, where there was always going to be a massive liquidation event, where there was news that would shake the market and bring down the price of Bitcoin quick for a V-shaped recovery, which usually led to people being completely sidelined when they missed that bottom of that flush. So this Wyckoff method that you can see in this image just shows how during this accumulation period, it's trying to get the maximum amount of fear into this period of time to try and shake out as many people who don't understand the asset, don't believe in the asset, or have high leverage positions where they'll need to either close that position at a loss or try and survive and add more collateral to bring down the liquidation level. Either way, these Wyckoff periods are hard to survive, and they can last half a year to 9 months to even longer, and it can happen across all asset classes. So it's a really important and profound part of this thread. He says the whales are accumulating, and this is what they do. Whales have time. They have large positions, so they can move the price of an asset very quickly. It's harder to do in equities because of the volume and the depth and the breadth of liquidity in these assets, in the trillion-dollar S&P 500 companies like Nvidia and Meta and Google. It's going to be hard to move the needle. Large hedge funds can do that. However, in crypto, these market caps can go up to 100 million. Bitcoin's a very small asset class at only 2 trillion, and so it can be quite easy for these large whales to move the price, and they just want to get as much of this asset as they can. When they move price up or down, the prey and the media will invent hundreds of reasons why to rationalize the move. When the move is happening, either to the downside or to the upside, there could be so many significant events at that point. But it doesn't really make a difference to the actual asset. It's just the price is going to follow the stories that are circulating currently through the media outlets that are being proliferated by large YouTube channels and influencers and influential people in particular. And as they proliferate this noise, it leads to a price movement. but it's only noise. And then he simply says that price makes narrative. When the price is going up, there's all of these positive stories that are happening, but all of these stories and all of this work was already happening. The Bitcoin Strategic Reserve was already being implemented. Sovereign wealth funds were already accumulating. Bitcoin was already showing exponential growth since its inception compared to other assets across indexes and commodities. And so the price going up just leads to this narrative now being proliferated in a positive way. Now, the kick in the pants that makes the strategy extra spicy, when there is bullish news, actual macro or political narrative, the whales will send the price down because you went long. When there is bearish news, actual macro or regulatory narrative, whales will send the price up because you went short. How I think about this point is very simply, when you are bringing excitement and euphoria into the market, you're also attracting, like a magnet, leverage traders that are going to open up high leverage positions to the long side. And that's going to be easy for you to liquidate because you can bring that price down because these whales have large positions which can move the price of Bitcoin down to the level that they want to reach. When you go short, it's usually at a time when there's max fear. It could be during a war crisis, it could be during a pandemic, it could be during a banking crisis. And that's when large whales and large exchanges can liquidate the shorts at max fear. 99.9% of traders lose liquidity in tokens. 100% of hodlers are up. Stop trying to outsmart the whales. There's trading ranges where if you were to open up a leveraged position in the range during a move for Bitcoin or any other asset within crypto, you're going to find there's an important range that the whales will keep you in. They will liquidate all of the leverage in this range, and therefore if you're impatient, you'll be liquidated. If you open up high leverage, you'll be liquidated. There's ranges where it's best to open up a long and open up a short. If you try and outsmart the whales, they will usually win because they just have so much collateral. They have so much of that asset that they can move the price so easily. Something that I've learned is that patience is your edge. The market is a tool that takes money from the impatient and gives it to the patient. It's every single time I've found any success in a trade that I've made, it's always when I've been most patient. It's always when I felt the worst, when I've waited and it's just been so difficult to see myself sidelined for a period of time. And then you have this tariff impact that leads to a massive liquidation event, that leads to a massive downturn, that gives you these opportunities. The patience is so important. It's probably the most important part of investing. The strategy of this person, Marty Party, is he bought his first Bitcoin in 2016, 9 years ago. He won't sell until 2026 or the peak of quantitative easing. He follows the liquidity and the business cycle. He buys significant dips, and when the price is flushed below the blue liquidation levels, he will then open up a long position. Now you can see these liquidation levels, they have very clear points, and all of these are 25x leverage for the blue, 50x leverage for the yellow, and then the orange, and then the red is 100x leverage. Like, these are very, very high leverage positions that the exchanges will liquidate. They will not allow these positions to continue, and I've seen this so many times. They will never allow for any of these lines to ride up for the next move of crypto, the next move of Bitcoin. They will always liquidate before they move the price up. So if you see the trading range, you know that it's going to come down to those levels at some point, which gives you the patience. Currently, we're at the peak of quantitative tightening, the absolute worst exit. What he's saying here is that with central banks having a 4.25% overnight interest rate, that can be brought down massively. The ISM, Institute for Supply Manufacturing, has still much more expansion left, over 50. We have got so much more time for the cycle to materialize and grow and develop, and therefore to exit now would be a missed opportunity in Marty Party's thoughts. Never trade in the range unless you are a professional scalper, you will lose. So if you ever open up a position inside the ranges, you will usually find yourself being liquidated or at a loss. There's two things here that really provide a infrastructure change to the direction of how manipulation occurs through market makers. You have the Binance exchange, which is the oldest exchange, which had the largest amount of crypto assets, which means that they could manipulate the prices, providing highly leveraged opportunities for traders and then liquidate those traders, essentially cannibalizing them. But when you have the CME group, the Chicago Mercantile Exchange, this is a traditional finance entity, and now they're starting to accumulate more. This is where Wall Street start to manipulate the price to where they want it to go. And so there's a fight between Binance and Wall Street. And usually in this game of Goliath and David, Goliath usually wins. And in this case, Goliath is the CME, Wall Street. Okay, now I'm going to look at some really important indicators from Jamie Coots, a macroeconomic investor, extremely objective and data-driven and quantitative. These three indicators can show that there's still so much more room left for Bitcoin's price to expand. So the first one is looking at the 200 equal weight index. So this is basically taking crypto assets and just kind of equally weighting them into an index. And usually the flow of money across all of these assets would go high into that green kind of formation. And you can see here that it's actually only starting to just tick up. There's still a lot more room for this to expand. It gives a good broader understanding of the crypto industry at the moment. The next one is the derivatives risk score. As euphoria starts to peak in the market, leverage starts to build up, starts to get higher. People start to take out way more speculative risk because they feel more confident because the markets are delivering, they're providing. This derivatives risk score usually only ever tops out when we're at a top. So at the moment, you can see it's quite low, usually goes as high as 5. And I've noticed that from my experience, a top in the market is never formed when people aren't interested and when people are fearful. A top only ever forms when people are excited and there is euphoria. It's got to be difficult for you to be able to sell. You want to be able to take risk and take out leverage because you feel confident that you're in the climate to be able to do that. And that usually always creates the tops. So this is a really useful score to look at. The next one is the network profitability risk score. If there's a lot of profit in the market, people are going to be more tempted every single day that the price continues to rise to sell and actually lock in some of that profit and make decisions that can change their lives. So that risk score is still quite low. There's still room for it to expand and hit the 5 level. So right now, I'd say that this is still opening up to a very healthy expansion market going into the rest of the year. Really interesting indicators to look at is the money supply, and in particular, the Taiwanese money supply. And what this indicator shows is that when Taiwan start to add liquidity from their central bank, it usually leads to a Bitcoin move as well. Now, this could mean that Taiwan are starting to prepare through printing money, buying Bitcoin to create more sovereignty and to decentralize their fiscal situation and protect themselves from China as tensions start to rise in that place. These Fibonacci retracements can be really useful. You can anchor from the bottom of the move, and then you can go as high as where it currently is, and it shows you where these levels can extend. And what I can see in these two extensions are you've got 122,000 and 136,000. But then if you continue and you extend it even further into that golden pocket, it can go as high as 175,000. That gives me a range that I am very confident with, which is around 130,000 to 180,000. And in those ranges, that's where I would start to aggressively take profit and start to rotate into something else. There's also this inverse head and shoulders that shows a massive move on the daily for Bitcoin to reach 150,000. And this person, Colin Talks Crypto, has been quite accurate with his predictions in the past, which shows that he could be a good signal for what could happen next. Could it be relevant? I want to finish this video with just hopefully some nuggets that can provide a deeper understanding of why Bitcoin has value. So going straight into this first thread that came from Fred Krueger, it really is just, what do you notice? 16K Bitcoin, that was during the Silvergate collapse, that was during the banking crisis. Bitcoin's at 25,000, that was during the debt ceiling fears and the regulatory crackdowns. The SEC sues Binance and Coinbase, and Bitcoin's now higher at 26,000. There's a global market crash. Bitcoin's now at 50,000. There's an Iran-Israel drone strike, 60,000 Bitcoin. Now Trump's Bitcoin reserve order disappoints. It's at 84,000. And then the Israel-Iran escalation, Bitcoin is at 202,000. It shows that over time, this asset, no matter what the fear is in the market, the fundamentals and the price continues to grow. The next thing I wanted to just really bring attention to is the difference between being rich and being wealthy. And in modern terms, being rich is having these designer items that don't have accrual of value, taking debt out to buy these things. And then cold storage Bitcoin and going to the gym and staying healthy is what wealth looks like, because you're protecting your energy through Bitcoin and you're protecting your health through taking care of yourself. The really profound interview from Jerome Powell of $1 trillion being added every 180 days. And if you take 1 trillion seconds, that takes us to 30,000 BC. When you invest in Bitcoin, you're investing in the infrastructure of inflation, not being something that central banks and the governments can allow to stop. They want to continue increasing the fiat currency and the money supply in the system because they need to. The central bank reduce and increase interest rates to control the money supply. They allow money to be more accessible for banks so that they can lower the reserve ratio, which means that they can lend out more through fractional reserve banking. They make sure that they buy back the bonds that the government issue, which means that they buy back the debt, which means that they basically essentially add through accounting entries money to the system digitally. The governments, they raise the debt ceilings by trillions through voting on new bills that get passed through the Senate. All of this adds more money to the money supply, increases inflation, debases the value of the currency and the value of the money. You've got a deflationary problem that China just recently experienced with the Evergrande housing estate, where they had a surplus of investment properties being built by state-funded companies like Evergrande. But because there were so many houses, there was so much supply, there wasn't enough demand from the investor class, it brought down the value of the property. The equity became less than the debt that was used to take out the loan to buy these properties in the first place. When you think about the economic zones on the Western Hemisphere, so many people have 30-year fixed mortgages. They need the value of their property to increase over time in order to pay back the debt that they've taken out in order to buy that property in the first place. In a deflationary economy, when the value of the debt becomes more expensive and more valuable than the equity and the investments that you've made, you have default, where whole classes of individuals will default on their credit. And that can lead to a credit problem and a collapse of most major economic zones. So Bitcoin solves this problem. Its scarcity allows it to support a higher multiple, but it's just something that's very sensitive to increases in money supply. I don't look at it as this superior digital gold. I look at it as just the only way to measure how much fiat currency is being inflated and how crypto guys are extremely interested in the technology. It's all about the tech, but this just made me laugh because it's really not, in most cases, about the tech. It's about the growth of the asset in terms of its dollar value. But the value of Bitcoin, for it to grow in dollar value terms, is its scarcity. It's its technology. It's its invention of being able to create a decentralized, automated supply that cannot be inflated. And the final thing that I wanted to share is the Texas governor has signed into law a Bitcoin strategic reserve, which means that, again, one of the biggest states in America and one of the biggest economic zones in the world have now started the plan to have a perpetual bid going on into the future. That just shows that there's going to be a lot of support for the price of Bitcoin, and that the dramatic reversals that we usually have may not be experienced going forward. So if you got any value from this video, like, comment, subscribe. Thank you very much. See you in the next one.